Hi everybody, welcome to another update on the stock screener. We're going to talk a bit about a concept that I call net liquidity for 4 gold miners that I own. So what is net liquidity? My definition of it is current assets minus total liabilities, and it actually shows us what the liquidity is of a company. I'm interested to see the current assets because these are the assets that they can easily sell. I'm not interested in the non-current assets. Those are the properties, etc. You cannot just sell a mine in a few days, right? So that's not liquid. That's illiquid. So to have the net liquidity, you just look at the current assets. And of course, we take the total liabilities because these things need to be paid off at some point, right? So this is the net liquidity, and I like to use this concept to check if a company is actually making money. It's actually increasing its liquidity. Here you can see the net liquidity of these 4 gold miners. For example, Monument Mining, it had a lot of net liquidity at some point in 2022. Then this went down because they were building something. They were building the flotation plant, and their oxide plant was not really making a lot of money. It had a very high all-in sustaining cost. So liquidity went down. They built a flotation plant, and at some point last year, they started to make money again because it went up. So this is the inflection point of Monument Mining. So RB Gold, also the same. They had a decline in net liquidity, probably due to bad costs, COVID problems, etc. And at some point, this started to improve again. They started to make money. So inflection point somewhere in 2022. And here you can see that they were starting to make money again. For Soma Gold, you can see here net liquidity went down because they were building Cordero. They were building Cordero, and you can see here also buying equipment, etc. So net liquidity went down, and at some point last year, at the beginning of last year, the liquidity started to grow again. So this is the inflection point. Of course, they were still building it. They were also acquiring properties, land, etc. So in 2023, it's not rising that much, but they did do something with that liquidity. They developed Cordero because it was still ramping up in production, and they also bought some land. So it's going to rise with Soma Gold at some point. It's still building, they're still increasing production, so some of that liquidity will get into growth. At some point when capex goes down, then liquidity will start to rise a lot. Mineros, this one is pretty flat in 2022, but you can see here a huge rise in net liquidity, and that's because they sold their Gualcamayo mine, and you can see immediately they paid off a lot of liabilities by selling that bad asset. And yeah, that's massive increase in net liquidity, and now it's still rising because they're making money. So 4 mines have different inflection points, Now let's see what happens with the stock price. So this is Monument Mining, the blue line. The stock price started to bottom out somewhere last year, 2023, and that was around the time that the flotation plant is built, and then it started to rise together with the net liquidity. I expect this to continue to rise as the flotation plant starts to generate money. So this trend will continue going up. Next one is Serabi Gold. Inflection point here, where we see net liquidity going up. And you can see that here as well. It went down here and then suddenly it shot up. So I still expect Serabi Gold to go up in net liquidity. So this trend is probably going to continue rising. It's a bit overbought now, could retrace a bit and then will continue higher. Soma Gold, yeah, they were still building the new mine here. You can see here that the share price was going down still, and at the inflection point, it shot up. So this net liquidity concept is a very good tool to estimate when the stock will start reversing. So you need to try to anticipate this inflection point, because if you can find this inflection point, then you know exactly where to buy these companies. I still expect this this trend to go higher as they make money. They have free cash flow right now, especially with this gold price. It's going to keep on rising, and I expect also that this stock price will keep on rising. But I just wanted to show you that this inflection point can be estimated using current assets minus total liabilities. And we'll show you where to buy the stock. Then we have Mineros. Mineros flat net liquidity. So didn't do well because they still had those bad mines. And suddenly when they sold these assets, then it started to shoot higher. So this was the inflection point, and you should have bought it somewhere here, and then it doubled. So another good example of net liquidity upsides and when to buy a company. Okay, so this is my estimate of how net liquidity will go up in the coming years. So this is 1 year. This is just 1 year and a half. So I think Serabi Gold is going to go up. They are going to cut costs and increase production. So it will be an exponential curve up. And the higher gold goes, the higher it will shoot higher. So currently market cap around 70 million. That's somewhere here. Yeah, this is going to go to book value in just 1 year, maybe 2 years. This is a buy, a very good buy for Serabi Gold. The second one, Monument Mining, inflection point and making money right now, around 20 million per year in free cash flow. So it goes up like this. Current market cap, only 40 million. So this is going to go above the market cap in just 1 year, maybe 2 years. And they also have the Murchison property, which is on itself $20 million. So this is extremely cheap. So Monument Mining, buy it, because this is going much higher. As you can see here, inflection point and starting to rise. SOMA Gold. SOMA Gold inflection point last year. Currently ramping up to a new high in production costs. They're trying to bring it down. I still think we could see 20 million and then 30 million in free cash flow. So it will go up like this. And production is also going to rise at some point. We're currently at 30,000 this year, 30, yeah, at least 37 to 40,000, and then next year rising to 45,000. And they still have capacity to grow. They say that they can go to 70,000. So at some point, the free cash flow is going to go to 50 million. So 50 million, that's this amount per year. So I mean, this can go exponential, but it takes time. They're still building it. So yeah, currently enterprise value of SOMA Gold is around 70 million, so somewhere here. It will take some time to get to that enterprise value, probably 2 years, 2 to 3 years, depending on how the production will increase. But this production is going to increase exponentially, like this. So yeah, still some work to do for SOMA Gold, but with high gold prices, they will be able to pay off debt much faster, less interest payments, and net liquidity will go up much faster. So still a buy. Mineros, a very good chart. It's rising. Net liquidity is almost positive, as you can see here. When it goes positive, then typically the stock will start soaring, because investors typically like to see a positive net liquidity. So more current assets than liabilities. And we are almost there with Mineros. So this is a very good buy. But okay, the market cap is, what is it? 100 million. I already forgot what the market cap was of Mineros. Maybe it was 200 million. But anyway, the chart is going up. So this is the outlook for the net liquidity of Mineros. It's looking very good. Okay. So which one would I buy right now? I think the cheapest one is Monument Mining. Clearly the cheapest one. They have 20 million in Murchison. If you deduct that, then the market cap is probably only 25 million maybe. So somewhere here. And net liquidity is going to reach that already in half a year, I think. Going like this. So this will reach 25 million very fast. And I would buy Monument Mining at this moment. So use this technique. It's just another tool that you can use to analyze gold miners. And I'll see you in the next video. Bye.